All right, Sarah, they're really busy keeping us updated on what's going on in Washington. Let's, follow a bit of that. We had the launch or the promise by Nigeria to host the African Monetary Institute. And of course, it's about managing the finances on the continent for the greater good and reducing reliance, especially on, some of those institutions, which we talk about interest rate and all of that. But let's perhaps drive this down to Nigeria and to individual levels and talk about integrated lending solutions. I wonder what that means. Immediately you hear it, but anyway, don't worry, you will get a better picture of it this morning because we have the Executive Director, Commercial Solutions at Z-Barnes Finance Limited, Mr. Ayo Oladimeji. Mr. Oladimeji, good morning. Welcome to the program.
Good morning. Thank you for having me.
Great. So we see Africa, the meetings going on in Washington. Africa seems to be building a coordinated front, looking for how to explore more sources of capital and to better use it. But of course, it starts from individual countries and then it goes back to the regional aspects. And so now we're talking about integrated lending solutions. What's that?
Integrated lending solutions will be non-traditional financing structures that empower business owners, mostly small and growth stage businesses in frontier markets, to access capital for business growth. So when you talk about traditional capital, it would be the traditional term loan in a bank, an overdraft facility on the debt side. On the equity side, it would be getting equity funding for a business. But we now have innovative instruments such as embedded financing, supplier credit, factoring, transaction level credit access for the sell side and the buy side, depending on what part of the market you're looking at. So all of that put together is what we would refer to as integrated financing solution.
Does this protect against high interest rates?
It's faster to deploy, and it solves this age-long problem of, matching customer expectations to what the financier is able to provide. So traditionally, you would have a structured term loan or an overdraft that is generic, that does not necessarily take into account the cash flow cycle of the business, or may not necessarily take into account the seasonal fluctuations and all of that. That doesn't give sufficient flexibility. What these embedded financing solutions do is, to essentially allow the business owner, the entrepreneur, to exercise their willpower. They have a standing line of credit, for example. They can use it at will. They only pay for what they use. Some of those financing solutions are even delivered to the supplier. So you take a case of, an FMCG distributor. The funding goes to the manufacturer or the large-scale importer. And once funding is made available by the financier, all the business owner needs to worry about, the distributor, is to make his logistics vehicle available for pickup and distribution.
It sounds like working capital.
So working capital solutions, fit right squarely into, the use case, the typical, one of the frequent use cases for embedded financing.
And I know that when you talk to those in the agricultural value chain, for instance, they always have this issue that traditional sources of funding do not consider the specifics. And so that's why we're supposed to have banks like the Bank of Agriculture. Unfortunately, I don't know how impactful that has been. So are you saying that this integrated funding now caters for these special areas?
Let me answer the question at two levels. One is that when you look at the general economy, the economy is largely organized into sectors. So agro-processing, farming, agro-processing is a sector. Oil and gas is a sector. Renewables, the gig economy, e-commerce, mobility, logistics, those are unique sectors within the economy, very important sectors. The usefulness of an integrated solution is that you deploy capital that match the nuances of a particular sector. So regarding agribusiness, which would be the second part of your question, is agriculture is a specialized economic activity. You cannot extend financing for agriculture without taking into account the specialized nature of that economic activity. That's number one. Number two is that in terms of risk and returns expectations, agro-processing or farming has its own peculiarities. So if you're going to play in that sector as a lender or as a capital provider, you have to be patient. You have to invest in market expertise. You have to invest in partnering with the stakeholders in that sector to ensure that the solutions you're bringing to market match the need or the needs of the participants, the entrepreneurs, the value chain, from the farmers, the smallholder farmers, large-scale farmers, the aggregators, to the off-takers, the manufacturers who utilize this agricultural input for food production, and of course at the distribution end, the distribution companies or the retailers that get it to our tables at home. So it requires specialized attention, and when you're developing financing solutions, you have to pay attention to the sector that you're deploying capital into.
Is there a special attention, because right now we do have a lot of gaps, maybe because food is one of the basic things, so I'm really interested in it. For instance, we still have about 50% of agricultural produce, wasting away because of preservation and storage. So I'm just trying to say that if this is a funding solution that could help plug that, could there be a special attention given to areas like this that we see very noticeable gaps in the economy?
I mean, absolutely. And food systems are vital, right? We have a large growing population. It's expensive to import food. So it just makes sense to ensure that agro-processing works. And there are multiple value chains that are important, from the oil palm value chain, the soya bean value chain, the wheat value chain, the cassava value chain, several value chains within the agro-processing sector. Your question is around, how much is being done? Is it enough? What is being done to reduce wastage? The wastage problem is for the most part a combination of logistics infrastructure on the one hand, and cold chain solutions to enable producers, farmers, store up yields from their farmlands before those products are moved to the market or to the off-takers. The good thing though is that over the last 2 years, a number of providers, including ourselves, have come into the market with equipment financing solutions, with partnering with international cold storage solution providers. I believe there are 1 or 2 organizations currently that are providing mobile cold storage for moving produce from farm gates into to the storage of the off-takers, and those kind of embedded solutions within the value chain, solving specific problems around cold storage, around logistics. Government is doing what government will do, but the private sector is also taking a significant lead, and we're seeing capital moving in the direction of enabling food systems, and that's why we're also betting long and big on food systems financing.
Yeah, well, I'm happy to hear that, but we need to see more, obviously, so that's that gap. But I asked the first question: the cost of funding, does it reduce with this integrated lending solution?
I would say it's risk moderate. So lending is a risky business, and cost of capital in Nigeria is not at its cheapest level. We're seeing some downward adjustments in cost of capital, but not at the level at which we would all be super happy. So I would say that the kind of capital that is available, debt financing that is available, is affordable. It's the kind of capital that the business can still take on and make some margin. Small businesses, mid-sized businesses, growth stage businesses.
Okay, and then the mobility financing.
Yeah.
What can you tell us about the appetite of sector-specific financing? We talked about agriculture. Logistics is also a big one.
It is.
In Nigeria at this time. Some time ago, someone contacted me to say they bring in strawberry from the estate in the north,
right,
and they only had one airline that was doing it, and that airline was about to stop. So how would they get strawberries from the north to the south where the market is? If they try to do it by road, it gets bad before it gets to the southern parts of the country. So logistics is also plaguing development and the growth of the economy.
It is, and we're seeing again providers rising to the occasion. We're seeing entrepreneurs who do the hard work, the heavy lifting, rising to the occasion, bringing in innovative solutions. So cold storage, important for solving things like this, for things like this, but also equipment financing, mobility financing, critical for solving for mobility solutions. So if a business owner wants financing for trucks, for cold storage equipment, for last mile distribution vehicles, there are equipment financing solutions, car financing solutions that we provide and that other providers also offer in the market to solve for this. We're also seeing green mobility financing. So we're not just talking about mobility financing now, we're talking about financing for electric vehicles that are used for business purposes, either in the ride-sharing sector, which is a massive job creation platform for our teeming youth population, or on the agriculture and FMCG side of things, where logistics is a big enabler in terms of the interaction between the different stakeholders in those value chains.
All right, well, we hope we would hear more of this integrated lending solutions and to be able to penetrate those areas, of the economy that really need affordable financing. I mean, let's be realistic. Capital is not cheap in Nigeria at this time.
Not yet.
Not yet. Yeah. Hopefully it will be in a short time. Well, thank you so much for your time.
It's been a pleasure.
On the program. Mr. Ayo Oladimeji, the Executive Director of Commercial Solutions of Z-Banks Finance Limited. Thank you.
Pleasure.